dear students, my colleagues, and all the esteemed persons who are watching the video. Well, this is Seema Jabeen from TTWRDC in Jangaon. And today I thought of choosing the topic financial accounting because all of you must be on a vacation right now, right? So I just thought of brushing up the basics of financial accounting so that it will just be like a revision for all of you. I hope all of you are doing well. Now let me just share my screen with you. So, what is financial accounting? You know, financial accounting is a subject, is a topic which is applicable in everyone's life. It is not just applicable in the life of a businessman or a businesswoman. It is applicable even in the life of a layman, a common man, because all of us tend to, save money. We spend money. We have certain expenses. We have certain incomes. We have all of these in our daily life, and hence financial accounting is applicable to all of us in our daily life. As we all know, Luca Pasilio is the father of financial accounting, is the father of modern financial accounting, and is a French accountant. So, what is this accounting? Before moving on to accounting, let me just talk about what a business is. What is business, guys? Girls and boys and people, what is a business? As a common definition says, business is a state of being busy. Being busy with what? It is, being busy with the transactions of the business. It is being busy with the exchange process of the business, the exchange of goods and services of the business. So, when I set up a business, and I have certain transactions going on in my business. As a human being, I tend to forget things, right? If today there were some 50 transactions which have taken place in my business, and tomorrow there are around 20 to 30 transactions that will take place in my business. As a human being, I tend to forget all these things. After a week or after just 2 to 3 days, I will not be able to remember all these transactions which have taken place in my business. Hence, for this purpose, what I do, I maintain a book for it. I maintain a book wherein I record all these transactions which have taken place in my business, right? So here starts the role of accounting. What is this accounting? Accounting is basically the language of business. It is the system of recording, summarizing, and analyzing the financial transactions of a business. It helps to communicate the financial transactions of the business to its end users. When a business is large, when you are running a big business house, you have voluminous number of transactions. You have n number of transactions which are taking place in your business, and it is not possible for us to remember each and every transaction which has taken place. For this purpose, we record these transactions in separate books, and that is termed as accounting, and it starts with bookkeeping. So, according to American Institute of Certified Public Accountants, accounting is an art of recording, analyzing, and summarizing in significant manner and in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. So accounting always starts with the concept of recording. Okay, after recording, you analyze these transactions, you summarize these transactions in various books and various statements, and at last you prepare your final statements, right? Once you're done with preparation of final statements, these results are being communicated to the parties interested. And another thing to be noted in accounting is it deals with only the transactions which are relating to money. Now, what is the need of accounting? What is the importance of accounting? Why accounting? So, as I have already told you, accounting is applicable, for any job opportunities. These days, you work as a doctor, you work as an engineer, you work, in any MNCs, in any companies. Accounting is applicable everywhere because each and every person on this universe, each and every person has certain transactions, that they have certain expenses, they have certain incomes, they have certain losses, they have certain gains. So accounting is applicable for any job opportunities, right? Then accounting is also useful in finding out the present financial stability by preparing a profit and loss account, and also it helps you to analyze or to find out the future economic stability of your organization. Then, a company who applies or makes use of effective accounting practice enjoys competitive advantage over other competitors, and also they can take good decisions, because when you have your books of accounts with you, when you have your statements with you, then it is possible for you to take good decisions for the future based upon your previous comparisons, based upon the studies of your previous reports, your present reports. With the help of these, you can take better and good decisions for the future. Then, accounting is also useful in taking effective decisions relating to cash utilization. As we all know, in a business, the money of the shareholders, the owners, is being invested. So, accounting helps you to take decisions regarding the utilization of this cash. All right. Then, accounting is not only useful to business firms but also to the common people in the day to day life. As I have already mentioned in the beginning of my class, accounting is just not the topic of businessman or a businesswoman. It is something which is applicable in everybody's life. Even a common man's life has accounting in it, because expenses and incomes are a part of everyone's life. So this is the need and importance of accounting. Let us now see what are the functions of accounting. As we have already seen the definition, which says that accounting is the art of recording, classifying, summarizing, analyzing, interpreting, and communicating the results to the parties concerned. So these becomes the functions of accounting. So let us see what recording is. What is recording? Recording is the first and the foremost function of accounting. It mainly deals with recording all the financial transactions of business in sequential order. And accounting always starts with your bookkeeping, wherein you record all the transactions in a sequential order, and then you place these transactions in the book of original entry or the prime entry, which is called as a journal. All right. Now, next, once you record all these transactions in the books of accounts, in the book of journal, the next step of accounting is you will have to prepare the respective ledger accounts, wherein all the similar entries are recorded under one head, and it contains different accounts on different pages. So what happens in this classification? All these similar entries are recorded at one place under one account, under one head. The next one, the next step, the next function is summarizing. So what is summarizing? Summarizing includes, presenting the information in the form of a different statement, which will be called as your trial balance. So this will help you. This is going to help you to calculate the arithmetical accuracy. The arithmetical accuracy will be known with the help of summarizing the accounting transactions. And then after summarizing, you have interpreting and analyzing. So once you are done with the function or with the part of summarizing, you then study these, you just examine or scrutinize or study these transactions in detail. That is called as interpreting and analyzing. And then once you are done with all this, once you are done with recording, classifying, summarizing, analyzing, and you are done with the preparation of the final statements, then the next function, the next step will be to communicate the results to the parties concerned. So who are these parties? These parties can be the stakeholders. These parties can be, the creditors, the suppliers, the debtors. Then you will have your government, the tax authorities. So all these are the parties, right? Now, the next topic will be the advantages and limitations of accounting. So, what are the advantages of accounting? See, when you have all the transactions maintained in a sequential order, when you have all the transactions maintained in a proper order, it is obviously an advantage to the business. Right? It is obviously an advantage because whenever you want to find out a particular transaction which has taken place on a particular date, and when you have the record of it, it becomes very easy for you to look into the transactions in the book that you have maintained. So, accounting maintains an organized documentation. It maintains and organized a sequential documentation of all the monetary transactions that have taken place in the business organization. Then it helps or it facilitates in determining the net profit or the net loss. As you are preparing your final accounts, that is a profit and loss account and your balance sheet, it helps you to find out the profit and loss position of your business. The next one is accounting records are useful in carrying out the comparison of the results of the business every year. See, when you have the records of this year, when you have the records of last year, when you have the records of previous year, so with the help of these records, you can make decisions for the future. Not only that, you can also compare. You can compare as to why the profits were more in the previous year, why the profits have fallen in this year, why the profits are more in this year, and why what was the reason for fall, for decreased profits in the previous year. So all this can be done with the help of accounting. So these are the advantages. And then accounting records helps in determining the exact and authentic position of the business organization. So once you are done with the preparation of your final accounts, that is your profit and loss account and your balance sheet, if these accounts or these helps you in determining the genuine and the true and exact position of your business. Then accounting records facilitates in identifying and recognizing the frauds which occur in the business organization. When you have a proper sequence for everything, when you have everything in an organized manner, then there is a very nice chance for frauds and errors taking place in your business organization. Hence, these accounting records are considered as the eyes and ears of the business organization. Now, the next concept, the next topic, limitations of accounting. See, as every person has two sides, there are good qualities and also bad qualities in every person, right? Just like that, when it comes to your concepts, when it comes to certain subject, also there are advantages and limitations as well. So what are the limitations of these accounting? Uh, Sometimes a business may incur great expenditure which may not be beneficial in present but may generate benefits in the future. So financial accounting fails to provide such information. All right. The next one, this financial accounting does not explain the importance of figures. It just shows you the records. It is completely dealing in monetary transactions only. Okay. Then this financial accounting records all the transactions of historical basis. It is just like a postmortem of records. It is just a postmortem of figures. It is dealing only with those transactions which have already taken place in the past. You are preparing the books of accounts after the year completes, right? So after the completion of 1 year, at the end of the year, you're preparing your financial records, you're preparing your accounts. Hence, it is a post-mortem of the transactions. Okay, because you're focusing on the past, you're not focusing on the present. You're preparing the accounts for the period which is already past. Hence, it is based upon the historical facts, and hence it is considered to be, the post-mortem of records. Then another greatest limitation of financial accounting is it takes into consideration only the monetary transactions, only the transactions which are dealing in numbers, which are dealing in figures. So only such transactions are being taken into account. Only the transactions which can be expressed in terms of money are being considered, and all the qualitative aspects like the performance of the employees, or the quality of the products, the lockdowns, the strikes in an organization, the conflicts, all these are given least importance or nil importance when it comes to accounting because it deals only in numbers and figures. Then As there are different levels in an organization, that is, you have top level, you have middle level, and you have lower level, and all these different levels of management require different types of information, right? But this financial accounting does not possess a built-in system which can provide information to all the levels of management. Now, the next topic is the users of accounting. So who are the users of this accounting information? Who studies this accounting reports? See, there are different users. We have the creditors, the government, the employees, the potential investors, the managers, the citizens, and the owners, and also the proprietor. Who's a proprietor? Proprietor is the owner of the business. Is a person who starts business with the aim of making profit. So he invests his hard-earned money in the business, right? Why does he invest his money in the business? It is obvious. He invests his business to earn profits. So it is necessary for him to have knowledge about the profitability and the financial stability of the concern. And moving on to managers, accounting information is very much useful to the managers for taking the decisions for the organization for the future. They study what all happened in the past, and with the help of this information, they try to make good decisions for the future. Right? The next, creditors. Who are the creditors? These are the persons from whom you have taken goods on credit. These are the suppliers of goods on credit, and hence, obviously, before supplying their goods to you, they would be very much interested in knowing your financial position in order to know whether you would be in a position to repay the principal and the interest amount or not. Okay. The next, potential investors. Who are these potential investors? Potential investors are the investors who are interested in investing their money in your business. As such, it becomes very much necessary for them to have complete information about the profitability and the financial position of your business, because they are going to invest their money in your business. Once they're satisfied with the reports and statements of your business, then they will surely invest their money in your business. Now, next, government. Why are these accounting records useful to the government? In order to levy the tax, right? It is only with the help of these accounting statements, it is only with the help of these accounting records that the government assesses a particular person or a company for the tax. Next, employees. Employees also will be eager to know the accounting information about the company in which they are working. Want to have the knowledge about the profits that the company has earned, so that if the company is going to declare any bonus, what will be the share, or what would be the percentage each one would be received. So employees also will be very much eager to know the accounting information about the business, about the company in which they are working. All right. And the citizens also, citizens like you and I would also be interested in knowing the accounting information of the government companies especially, and the companies which provides the basic amenities like gas, electricity, and transport. And not only that, as a voter, and as a taxpayer, every citizen must possess the knowledge of every public utility concern. Now, the next topic is the accounting principles. So what are these accounting principles? These accounting principles are the rules and regulations, which are being followed by the accountants. So when you record the transactions in the books of accounts, you are bound to follow certain rules and regulations. You simply cannot record the transactions. You're supposed to follow certain principles, certain rules and regulations at the time of recording the transactions. So, in this accounting principles, you have accounting concepts and accounting conventions, right? What are these accounting concepts? So, a financial accounting is based upon some concepts, which follows various assumptions or rules for recording the business transactions. Now, let us see what these concepts are. The first concept is the business entity concept. Here, it says that the proprietor is a separate person, that is the proprietor or the owner. Proprietor is the owner. So this owner is a separate person and the business is a separate person. This concept clearly states that the personal transactions of the owner should never be mixed up with the transactions of the business. So this is your business entity concept. The next one is going concern concept. So this concept says that any business is started not with the aim of closing it in a month or two, but it is always started, with the notion that it will go on for a longer period of time. If you set up a business only for 1 or 2 months, and that will never be called as a business. All right. So there is no intention of winding up the business according to this concept in the near future. Now, next, money measurement concept. So, what is this money measurement concept? This concept clearly states, this concept says that only those transactions which can be expressed in terms of money will be recorded in the books of accounts. The non-monetary transactions have no place in the books of accounts, as we have already seen this in the limitations of accounting, that it gives importance only to the numbers and figures. Only the quantitative aspects are given importance. The next one is the cost concept. So this concept states that only the actual price of the asset is to be recorded in the books of accounts. Okay, the price at which you have purchased, only that is to be recorded in the books of accounts. The next very important concept is the dual aspect concept. Dual means two. So this concept says that every business transaction has a twofold effect. One would be the debit and the other one will be the credit. So every debit should have a corresponding credit and every credit should have a corresponding debit. So you take example of purchases. What is the entry for purchases? Purchases accounted are to cash account. So every debit purchases has a corresponding credit and every credit should have a corresponding debit. So that is called as dual aspect concept. Here it takes all the three types of accounts into consideration, that is personal account, real account and nominal account. All three types of accounts are taken into consideration when you are following the dual aspect concept. Now the next one is accounting period concept. So this accounting period concept says that the life of the business, even though the life of the business is very long, as we have already seen in the going concern concept, but still, after the completion of 12 months, that is a period of 1 year, every proprietor, every owner is supposed to prepare their accounting statements. They're supposed to prepare the final accounts in order to know their profitability position. So this is known as the accounting period concept. Now the next one is matching concept. So this matching concept says that there should always be a match between the costs and the revenue. So both of these should be matched, and ultimately your the balancing figure, that is your profit or your loss, will be ascertained. Then the next one is the realization concept. So this concept says that the revenue, irrespective of whether the amount is received or not, as soon as the sale is effected, the transaction is to be recorded in the books of accounts. Now, if I've sold goods of 10,000 rupees today, I have to record it in the books of accounts, although I'm receiving the money for it in the future. But still, because the sale has been effected, the sale has taken place, that is for sure going to be recorded in the books of accounts. All right. So these are the different types of accounting concepts. Now let us see the conventions of accounting. So what are these conventions? These are, the practices which helps the accountant in preparation of the accounting statements. Let us quickly go through what the important conventions of accounting are. The first one is convention of conservatism. So according to this convention, a businessman, to be on safe side, he has to be very much prudent, he has to be very much wise to anticipate no profits. The businessman will expect no profits, but he has to provide for all losses, because the conditions of business are always uncertain, right? So the businessman will anticipate no profits, but he has to provide for all the possible losses. So this is the concept of conservatism. And the next one is convention of full disclosure. So according to this convention, the financial statements which are prepared by the accountant must provide the complete and the true information about the company. Nothing is to be hidden. So whatever information is related to the business, whatever information is related to your company, everything has to be disclosed. Okay. So this financial statements must be prepared in accordance to the laws. You have to follow all the laws, all the rules and regulations while preparing the financial statements. The next one, convention of consistency. So what is consistency? following the same thing again and again. That is called as consistency. We say consistent performance of this particular student. That means he has been, maintaining the same level of performance. So this convention says that a company must follow the same accounting practices and methods from one period to another. We can take the example of depreciation, right? If you are following the straight line method of providing depreciation this year, the same method is to be followed next year also, because it helps in the easy comparison of the financial statements. Once you change the method from straight line method to diminishing balance method in the next year, then it becomes very difficult to evaluate and compare the true financial position of the company. So this is the convention of consistency. The next one is convention of materiality. So what is this convention of materiality? It means that the accountant must give importance to all the material details and must avoid any unnecessary and unimportant details. Something which is material to the company. If you have purchased an asset of 50,000, then that is material, right? So that is to be mentioned in the books of accounts. So sometimes, if I have purchased a basket worth 5 rupees, that is not, that can be termed as immaterial also. Sometimes it can come under your petty expense. So convention of materiality says that the accountant must give importance to all the important material details and must avoid any unnecessary and unimportant details. Now the next concept, the next topic is the various branches of accounting. As accounting provides information to different end users at various levels, uh, this information helps in analyzing the financial position of the business. So what are the various branches of accounting? Let us quickly look into these different branches. You have the financial accounting, the cost accounting, the management accounting, inflation accounting, the human resource accounting, and the responsibility accounting. So what is financial accounting? The subject which we are dealing now is financial accounting. So this financial accounting will help you in preparation of the financial statements such as your profit and loss account and your balance sheet. And once you are done with preparation of these statements, it helps in communicating this accounting information to the parties interested. And these parties could be your shareholders, your employees, the government, the creditors, the stakeholders, the debtors, the employees. All these are the different parties which would be interested in studying your financial statements. And what is the main objective of this financial accounting? The main objective is to analyze the profit or loss position of the business. The next one is cost accounting. So what is cost accounting? This cost accounting is revolving entirely around the cost. Cost accounting revolves entirely around cost. It always tries to find ways and means of producing the goods and services with the least cost possible. It always tries to find out the ways and means to eliminate the waste and control the cost, right? The next one is your management accounting. So what is this management accounting? This management accounting is the accounting which helps in making the decisions for the future. Management accounting extracts information from the financial accounting and cost accounting and helps in making effective decisions for carrying out the business smoothly. The next one is inflation accounting, wherein this particular type of accounting studies the increase in the market values, and it also studies the past values, the present values presented in the financial statements. The next one is your human resource accounting. Now, this has become a very important concept. So, this human resource accounting is also known as the human asset accounting, which is involved in identifying, measuring, capturing, tracking, and analyzing the potential of the human resources of a company and then communicating the resultant information to the stakeholders of a company. So this human resource accounting is a method by which a cost would be assigned to every employee when recruited, and then the value of that and that the value that that particular employee would generate in the future. So this is all about your human resource accounting. The next one is your responsibility accounting. So what is this responsibility accounting? It is, basically developed to fulfill the operations of planning and control. And planning and controlling will be the primary step of this responsibility accounting, wherein standards are set and the actuals are being compared with the standards. So this responsibility accounting is a system of control where responsibility is assigned for the control of cost. The persons are made responsible. They have a separate responsibility center, and these persons are made responsible for the control of cost. And proper authority is also given to the persons so that they are able to keep up their performance. Now next, accounting standards. What are these accounting standards? So these are the written statements which are issued by the professional bodies, and it contains the rules and regulations which the accountant is supposed to follow while preparing the financial statements. So what is the importance of these accounting standards? There will be uniformity. Okay, when you follow the accounting standards, when you follow the rules and regulations which are being given by the professional bodies, there will always be uniformity. And you are supposed to follow the same accounting principles every year. Then when you follow the accounting principles, you can easily compare your results because there is consistency. So the results of one year can be compared to that of the previous year. Hence, the accounting standards gives you the scope for comparing your results. And reliability, when you follow all the rules and regulations of accounting, when you follow all the standards of accounting, then it is for sure that the accounts and the statements which you are uh, producing are very much reliable, and that there is complete fairness in your financial statements. Then these are very much useful to the investors. So accounting standards helps the investors in analyzing the growth of different companies developing on the financial statements. And out of these companies, the best alternative is selected for taking the investment decision. So these are very much useful to the potential investors. And also the accounting standards. I mean, when a company follows the accounting standards, it is very much helpful for the auditor as well. Because when the auditor comes to your organization for auditing the books of accounts, and when he knows that you have followed all the accounting standards, all the rules and regulations of accounting, then it becomes very much easier for him to audit your books of accounts. Now, so the list of accounting standards issued by the Accounting Standard Board are 32. Let me, as we are running short of time, I would not discuss all the 32 accounting standards. Now let us move on to the next topic, that is the systems of accounting. So accounting systems again are classified as systems of bookkeeping and systems of accounting. So under the systems of bookkeeping, you have single entry system and you have double entry system, right? And under the systems of accounting, you have cash system and the accrual system. So let us see the systems of bookkeeping. First one is your single entry system. What is a single entry system? The single entry system is actually not a system at all. It is completely unscientific. It is, a method of maintaining the incomplete uh, books of accounts. That means in single entry system, apart from maintaining a cash book, only the personal account transactions are recorded and maintained. The real account and the nominal account transactions are not at all given importance, are not at all considered when it comes to a single entry system. And the single entry system, as it is completely unscientific, and the accounts maintained under the single entry system are generally not accepted by the tax authorities. Hence, it is useful only to the small business organizations. It is not at all useful to the big business houses. Now, the next one, double entry system. So this is a system which is being followed by every organization. So this double entry system records the transactions of personal account, real account, and also nominal account. Okay, it records all the aspects, the debit aspect as well as the credit aspect, and this is being followed by all the big business houses. And the accounts and the records maintained under the double entry system are very much reliable and are accepted by the tax authorities and also the government. Now let us see the systems of accounting. What are the systems of accounting? You have the cash system of accounting and the accrual system of accounting. So what is this cash system of accounting? This cash system of accounting records only the cash related entries. Those entries, those transactions wherein the cash is received immediately and where the cash is paid immediately. Only such transactions are recorded under the cash system. All right. Any outstandings, any accrued will not be recorded under your cash system. Whereas this accrual system of accounting, it has everything in it. That is, it records the cash transactions, and also it records the accrued or the outstanding transactions in it. Hence, this accrual system of accounting is better than the cash system of accounting, and it is being recommended by the Companies Act for all the companies to use this accrual system of accounting. So these are the two systems of accounting: cash system and accrual system. Now, let us see the classification of accounts. Now, under the types of accounts, see, you have the personal account and the impersonal account. So, under the personal accounts, you have physical or natural person, artificial or legal personal account, and the representative personal account. Under the impersonal, you have real account and nominal account. Under real, you have tangible real account and intangible real account. Whereas under nominal, you have your losses and expenses and incomes and gains. So, let us see the classification based upon your personal account. Natural person. Who's the natural person? You and I, the persons created by God, are the natural persons. Example: Mahesh's account, Seema's account, Swati's account. So these are all the natural persons. Now, when it comes to artificial person, as I already told you, company is always an artificial being. So the companies, the accounts of companies, accounts of clubs, all this becomes the artificial accounts. Now, the next one, representative accounts. So usually these accounts are prepared when certain amount is due to a person or a group of persons. Example, your outstanding salaries, okay, your prepaid expenses, all this will come under the representative accounts. And what is the rule for this personal account? Debit the receiver, credit the giver. Now let us move on to the next account, that is the real account. So what is real account? It involves all those transactions which are relating to properties and assets of the business. And this real account is of two types: tangible account and intangible account. So tangible assets or the tangible account comprises of all those assets which can be seen, touched, and felt. Okay, they can be measured, they can be touched, they can be viewed, and they can be felt. So these are your tangible assets or the tangible accounts. The examples can be your stock account, your building account, your furniture account, your bank account. All this can be seen, right? They can be touched. So these are your tangible assets. Now next one, what is an intangible account? So this intangible account involves the account of those assets which cannot be seen, which cannot be touched, but still which can be measured in terms of money. Example, the best example for intangible account is your goodwill account, your patent account, your trademarks. All these are your intangible account. So the rule for real account is debit what comes in and credit what goes out. The next one is your nominal account. So this nominal account basically comprises of all your expenses and losses and incomes and gains. Okay, your expenses and losses like your salaries, your depreciation, your wages, your postage, your telephone, telegraph, all this will come under your expenses and losses. Whereas your incomes and gains could be your rent received, commission received, interest received, all this would come under your incomes and gains. So the rule of this nominal account is debit all expenses and losses and credit all incomes and gains. So these are the different types of accounts, and these are very, very, very important. At any point of time in your life, you should be able to tell the rules of these, the golden rules of these three accounts. Now, the next topic, accounting process or the accounting cycle. So this accounting cycle comprises of collecting and analyzing the documents. So this is the first one, posting in journal. Then after posting in journal, you prepare the necessary ledger accounts. Then you prepare your trial balance. You adjust the trial balance, that is balance the trial balance. And then you prepare your final accounts. And this final accounts comprises of trading account, profit and loss account, and your balance sheet. So what is this first step? That is the collection of the transactions. That is just like your bookkeeping. The first step will be you will record all the transactions which have taken place in separate book, and that will be called as bookkeeping. Then from this bookkeeping, you frame necessary journal entries. You frame the journal entries and post it in the book of original entry, which is called as the journal. You post these entries in the journal, and then once you post these entries in the journal, you prepare your respective ledger accounts. That is, all the accounts of the same nature, the same accounts will come under one particular head. So that will be called as your ledger. Once you post all the transactions, all the entries in the respective ledger accounts, the next step would be to balance your ledger accounts. You get a balancing amount, and then after these ledger postings, you prepare the trial balance, wherein the arithmetical accuracy of the accounts will be known with the preparation of this trial balance. Once you are done with preparing your trial balance, the last step will be you prepare your final accounts. What are these final accounts? These final accounts are the final statements which are prepared at the end of the year. Once the year is completed, once that 12 months period is completed, you prepare your final accounts. And these final accounts comprises of your trading account, your profit and loss account, and your balance sheet. So these final accounts will help you to know the profitability position of the business and also the financial position of the business. You come to know the profitability position of your business by preparing your profit and loss account, and then you come to know the financial position of the business by preparing your balance sheet. Another important point to be noted in final accounts is your adjustment entries. The adjustments are very, very, very important. Especially you have a few adjustments which are important, girls, like your outstanding expenses, your prepaid expenses, your outstanding or the accrued incomes, your pre-received income. Then you have your depreciation, your closing stock, your bad debts. All these are a few important, or rather I can say very important adjustments of your final accounts. So this is all about the basics of accounting. So today in this video, in this class, we have seen the basics of accounting, starting from the meaning of accounting, what accounting is, what is the need of accounting, right? The importance of accounting. Why is accounting important? It is important. It is applicable not only in the businesses but also in our daily life, in the in the life of a common man as well. And then we have also seen the functions of accounting, which is nothing but the definition of accounting is being broken into parts, and those becomes the functions of accounting. Next, we have also seen the advantages of accounting plus the limitations of accounting. The greatest limitation of accounting is only that it is a post-mortem of records. It shows or it prepares the accounts which for a year which is already passed, and hence that is the biggest limitation. Another limitation which is important, it is giving importance only to the monetary transactions, only to the quantitative aspects. The qualitative aspects are completely ignored. Then we have also seen who the users of accounting are. Yes, they can be the creditors, the government, the employees, the potential investors, managers, citizens, and owners. So all these people are the users of the accounting information. And then another important topic, another important concept that we have seen are the principles of accounting, right? Under the accounting principles, we have seen the concepts and the conventions, and every business organization, every accountant is supposed to follow all these principles of accounting while preparing the books of accounts, right? And then we have seen the accounting, under the principles, we have seen the accounting concepts, we have seen the accounting conventions. Then we have also seen the various branches of accounting, which is another important topic. These days, it is not only about financial accounting. You have other aspects also. You have other branches also. Like you have the cost accounting, your management accounting, your inflation accounting. Then you have the human resource accounting and the responsibility accounting. Then we have seen we have looked into the accounting standards. Just an outline of accounting standards was given. Altogether, we have 32 accounting standards issued by the accounting board. Then we have also seen the systems of accounting. Under systems, we have accounting I mean, you have systems of bookkeeping and you have systems of accounting. Under systems of bookkeeping, you have the single entry system and the double entry system, whereas under systems of accounting, we have the cash system and the accrual system. So always accrual system is better because it takes the cash transactions as well as the accrued transactions into account, and it is only with the help of this approval system will you be able to know the real picture, the true picture of the company. The next one, we have seen the classification of accounts, which is very, very important. We have three different types of accounts: personal account, real account, and nominal accounts. The rule of personal account is debit the receiver, credit the giver. The rule of real account is debit what comes in and credit what goes out. Whereas the rule of nominal account is debit all expenses and losses and credit all incomes and gains. And the last topic for the day is the accounting process or the accounting cycle. So this accounting cycle comprises of various stages, starting from bookkeeping and then, posting these transactions to the books of original entry, that is journalizing the transactions, then posting it to the respective ledger accounts, then balancing the ledger accounts, then extracting the balances from the ledger accounts and preparing a trial balance in order to check the arithmetical accuracy, and at last preparing the final accounts, which comprises of trading account, profit and loss account, and balance sheet. So it is with the help of these final accounts will you be able to know the true and the exact financial position of the business. The profitability position and the financial position of the business is ascertained or is known with the help of the profit and loss account and the balance sheet. So that's it in this class for today. These are just the basic concepts of accounting, and I want all of you to please go through these basics, which you are bound to get these topics for your exam of your first semester. So that's it for the day. Thank you so much. See you in the next class, probably with another topic. Stay home, stay safe, and have a good time. Thank you.